Let's look at the African markets. They've enjoyed a stellar run in the period from 2002 to 2012, with the MSCI EFM index that excludes South Africa cumulatively up by close to 500%. And that compares favorably to the MSCI Emerging Markets Index, which is appreciated by approximately 300%. Here from Botswana to take us on a whistle-stop tour of the capital markets of the continent is Amit Baketa from IPRO. Hi Amit, let's look at that number there, 500% in 10 years, and then the other number I've got here is 39% in 1 year. That's of course excluding South Africa.
Exactly.
Where does this growth come from? It must be rather uneven.
Yes, I mean it is uneven considering the fact that the MSCI EFM indices is highly weighted, with specific countries like Nigeria and Kenya and Egypt to a certain extent representing, 30, 35% or 40% of the index. And given the fact that both Kenya, Nigeria and Egypt rallied more than 30% in US dollars this year, this explains this huge performance of African markets in the MSCI EFM Africa so far this year.
Are there people out there who put a lot of money in 10 years ago, or is this notional? I mean, is it if you had, but actually there are not too many people who did?
No, there are not too many people who did it, because in those days we need to understand that it was the emerging markets, the broader emerging markets. It was the BRIC markets, the Brazil, Russia, China and India, which were the favorite among investors, etc. It's only start and beginning of 2006, 2007, and we saw an increase post the 2008 global financial crisis, that this interest for Africa grew exponentially, I'd say.
Amit, I'm interested to know and find out around, we know some of the regional superpowers, Nigeria, Kenya, Egypt and South Africa, they're almost the BRICS of Africa. But I'm interested to find out how the smaller markets coming along. That number that we've seen is incredible. I mean, 500% over the 10 years. Mm-hmm. But are investors taking advantage of the strong returns that have been posted in these African markets? And are you seeing liquidity increase on the listed exchanges for both equity and debt?
We need to be able to separate between the liquidity that's available on the debt space and on the equity space. I mean, contrary to the perception, liquidity on the debt market is hugely ample. We see amazing liquidity, whether it's markets like Nigeria, Kenya, even Ghana, Zambia, for example. There's ample liquidity. I mean, it is quite interesting to note that this year Zambia saw its first Eurobond issue, which was stated about 650 million US dollars, oversubscribed by 26 times. So that's a lot of growing interest. Now, when you come back to the equity markets, for example, yes, these markets are highly liquid, but the smaller markets, they are relatively illiquid with a very low level of free float, actually. But when it comes to certain companies, we've seen that over time they've gone through rights issue, for example, to be able to increase liquidity. And given the fact that over the past 4 or 5 years we've seen a growing number of foreigners holding these smaller illiquid investments, these have pushed these smaller companies to free float and to issue much more shares. So yes, it is progressing at a slow pace, but the smaller markets remain relatively illiquid today. Yes.
What about index purchases? In South Africa it's quite sophisticated. You've got the Satrix, you buy the exchange, you buy the top 40 and so on. It strikes me with a lot of these companies, the exchanges are volatile. They go up by big amounts if one company trades, because there are relatively few companies compared to a bigger market like South Africa. If you were to buy the index, you could make quite a lot of money. Are those opportunities available in Africa generally? I
mean, when you look at these MSCI tracker indices today, there are no ETFs as such today to trade Africa. One problem is the underlying market size itself, but one thing is about having the index or the benchmark, that theoretically reflect the performance of these markets. And the second thing is about having index trackers, etc. But at the end of the day, the more index trackers, if they do come along, they will have to invest in these underlyings. And there seems to be a misallocation or problem with respect to the market size. So the size needs to grow so that we can see much more index funds or ETFs coming up in the future.
Amit, I'd like you to look into your crystal ball and just give us a perception, an appreciation around the varying yields available in fixed income on the continent. You obviously say that liquidity is there, there's ample liquidity. What's the sort of yields that foreigners can get sort of from east to west coast on the continent at this point?
Yes, I mean, when we look at yields, I mean, it's quite interesting because we are at a point where a lot of opportunities have already taken place because of the problem that, you know, Eastern Africa, the whole Horn of Africa faced last year. High inflation rates, yields went up to 20%, the early 20s, etc. And this year, inflation and those central governments have been compressing and reducing interest rates. So we've seen yields from the odds of the early 20% come down to about 10, 11% this year. That's Eastern Africa. In Nigeria, for example, today, the yields on the short end of the curve is still, you know, I mean, hovering about 11, 12, 13%. And our outlook for 2013 suggests that most probably inflation must have peaked already, and we expect inflation to come down and yield compression going forward. Very near to Nigeria, there's Ghana. Now, Ghana has faced, you know, I mean, a period of transitory and very volatile inflationary environment. So what we have noticed is, for example, last year, over the past 2-3 years, Ghana inflation picked up to about 25%. Now the interest rates in Ghana today is at about 20%. Now when you look at inflation, it's already abated to the 9% level. So that implies quite a very interesting real interest rates going forward. So now, if you are buying in your Ghanaian debt, for example, from 20%, we expect those yields at the shorter end of the curve to compress towards 11, 12%. But what's important is when you invest in these bonds, Sub-Saharan African bonds, it is very important to look at the currency fluctuations as well, because the Ghanaian cedi has depreciated from parity a few years back to almost the double versus the greenback right now. Should you gain on the yield side, you might lose quite substantially on the currency side as well. So it's very important to merge the two.
Amit, what about political risk? In South Africa, we talk about policy risk more than political risk in the sense of elections. But talking to the guys in Kenya, as we have in the last couple of weeks, they've been saying that the markets are now beginning to pull back because they're waiting for the next election. And given the violence and the contestation that happened with the last election, it's a real factor.
No, definitely. We expect the market to start retracing from the current levels. Actually, our projections for 2013 have been revised substantially downwards. Why? Because, as you rightly mentioned, the underlying risk that we are facing. Now, the country is heading for elections in March 2013. Now, we all remember what happened in 2007, 2008. Now, it is very important to understand, sitting in South Africa, we're not in Nairobi, we're not in the Rift Valley there, but when you talk to people from the Rift Valley there, they are seeing those ethnical tensions building up already. And what we are expecting is that most probably Odinga from the ODM will secure the highest percentage of votes. And if the elections turn out to be the election results turn out to be on the other side, that could well probably sparkle some massive unrest there. So what we're expecting for the Kenyan market for next year is a gradual correction as investors sit on the sidelines and wait and watch what really happens. So that would most probably put a lot of pressure on the Kenyan shilling going forward. But on a long-term basis, Kenya still has a lot of very attractive companies. Yes.
I think that seems to be a key feature with some of the African elections, is that everyone just kind of stops and pauses and slows down in the build-up to the elections. And then if things go well, you obviously see a resumption in economic activity, so it reflects in the economic cycle.
Exactly.
It's amazing how close some of these African elections have been. I saw the election result from Ghana was almost within 1% of the two within the two main contenders. But something I just wanted to touch on that struck me when we were discussing off air is developments in the soul of Africa around the DRC, and the implication that Rwanda and Uganda might face potential sanctions for their involvement in the M23 rebellion. Can you just give us a picture of what's going on there and perhaps any outcomes that might affect markets in those areas?
I mean, yes, I mean, historically, both Rwanda and Uganda have been, off the record supporting the M23 Tutsi rebels for quite some time now. Now, from these erupted right from the days, of the genocide in Rwanda, etc. So today what we are seeing is that behind the doors, these two countries and their ruling parties are alleged to be supporting the M23 rebels. So what's been happening is that there has been a lot of international sanctions going on, where some of the donors have suspended aids to these two countries. This is a big problem for the country itself and for the economies of these countries. Why? Because a lot of these, both of these countries, they depend a lot on these inflows for their recurring expenditures and investments, etc. But we see, especially Rwanda, as being in the epicenter of probably a regional conflict zone. But apart from the DRBC, we shouldn't forget that Sudan and Southern Sudan also have been in conflict, despite oil production resuming very lately. That could be another messy place to be.
Looking at the market caps, the relative market caps, I'm rounding off the numbers, $800,000 the equivalent. South Africa's 700,000, 7/8 of the African market cap. There are a couple of small ones, a couple of giants. Nigeria 48,000 and Ghana 24, Kenya 12. The rest 4, 5. Of those little, relatively small exchanges, are there opportunities there because they get overlooked?
Yes. I mean, there are definitely opportunities because they get definitely overlooked, but at the same time their coverage is not that extensive today. For example, in Rwanda, there's the largest banks by asset there, which is Bank of Kigali. Now, when you look at its CAGR, its past 5 years CAGR in its net interest income, in its profit after tax, etc., it's very, very attractive. And when you look at it from a multiples perspective, these are companies that you want to buy in at very attractive levels. There's Braliwa, the biggest brewer in Rwanda, for example, another one of the most attractive brewers in sub-Saharan Africa. Now, when you move to other markets, for example, there are certain companies which are today extremely, extremely interesting. But again, because of the political risk, the country risk, the risk premium, etc., it's been hugely overlooked. And there, if I might, we just go next door to Zimbabwe, for example, and there are two amazing companies there, which is the largest telecommunications player there, Econet Wireless, and the other one is Delta, the brewer, and they're all trading at hardly 5 or 6 times earnings, with growth, past 5 years CAGR growth in excess of 20%. So yes, tremendous opportunities, but we need to know where to look, actually.
We'll have to pause there, I'm afraid. Clearly, if you want to do this, you've got to do some homework and get into the companies. Of course, when I said thousands, it is a bracket above it which says millions. 731, it's millions rather than hundreds of thousands. But these are big numbers for some of those exchanges.